See the first few early birds have already joined. Love that.
Just a quick question, Dave, on the kind of the visuals here. So what I can see is kind of my name and Ankit's name and a video of Shabrendum and Piers. When we start up, will the videos be arranged so people can see the speakers and the panelists, or do we need to log off and log back in again or something?
It should only be the
on the visuals here. So what I can see is my name and Ankit's name.
It should be only the name of the speakers, Jonathan.
Will the videos be arranged?
Jonathan, it should only be the panelists.
There seems to be some kind of echo on someone's.
Okay, we are going live now. Mark Piers.
Hi.
Good afternoon, everybody, and welcome to this webinar today, hosted by Medici. And we'll have Accuity and Currencycloud talking to us about what the latest trends are in payments, what situations we are solving for merchants, for banks, for fintech companies, and also look at what trends are going to drive 2021 and beyond. So we have with us Mark Bradbury from Accuity, who heads up payments there. And he has been a successful entrepreneur in the payments business, and he has joined Accuity as a part of that transaction. And he works a lot with banks and financial institutions in both developed and developing markets, and is following the fast ACH market quite closely. So he'll be talking to us more on everything related to cross-border, business to business, even on risk and compliance. And it's a great story of how an almanac that's 175 years old is being converted from a directory to a pay-as-you-go API that validates payments for you as you type in the entries. So it's a great transformation story. So Mark will be sharing more about what Accuity is doing. And on the other hand, we have Piers Marais, who is the director of product at Currencycloud, which started as a cross-border, cross-currency startup a few years ago, but has grown its repertoire to many more functions in its API. So they are truly an API-first company and are growing in markets, including Asia. So welcome to you both, Mark and Piers. And why don't we get you started and tell us a little bit about yourself and what you do, Mark and Piers.
Yeah, I'll start. So I'm Mark Bradbury. I'm head of payments at Accuity. I was, up until March, the CEO of Apply Financial, who were the world's leading API provider for payment validation. And now I head up all the payment products for Accuity, which includes all the data products, the APIs for payment validation and KYC. I've been in the business over 35 years, so not quite as old as Banker's Almanac, but some days I feel that old, but not quite. Over to you, Piers.
Hi, I'm Piers Marais. As Shabrendu said, I'm product director for payments at Currencycloud. And if you've not heard of Currencycloud, we power the international payments offerings for many banks, fintechs, and FX brokers around the world. As Shabrendu said, we're a digital-first business. We're API-led. And we have a suite of APIs that basically allows our clients to issue virtual accounts in their customers' names, to collect funds across borders, to hold balances in over 30 currencies, conversions using real-time wholesale FX rates, and then obviously the payments out, both via Swift wire transfer and domestic payment rails in 34 currencies to over 200 countries, around the world. And as a product director, I basically look after the strategy and delivery of all of our clients' outbound flows. And I work at that intersection of, I guess, the clients, developers, and the wider business to ensure that our payments products continue to really add maximum value to our clients and their own customers.
Thank you, Mark, Piers. So let's get us started on the immediate now of payments. So as a consumer, as somebody who shops online, as a bank that sends money to other banks, as a small company that's paying its employees, I expect that payments work because I set it up, I do all the data filling, and I expect that it should go through each time I do it. So Piers, let's start talking about what this term straight-through processing actually means and why is it so important for the merchants, for the consumers, and the banks. So take us through what straight-through processing actually means for all of us.
Yeah, STP, straight-through processing, straight-through payment processing, as we tend to call it, is really that end-to-end automatic processing of the payment, done by software, done by systems, with zero manual human intervention. That's the kind of the simple principle behind it. Really, I suppose the benefits that STP should provide are about a faster end-to-end flow. You've got no dependency on humans, and they should also be cheaper. again, there's no dependency on humans. From a Currencycloud perspective, STP has really been at what I would say the core of our DNA since we began. We've always taken the approach to automate where possible and to employ as few people for repetitive manual tasks as possible. And in terms of the benefits we see, that allows us effectively to offer STP payments via a fully automated API offering that in turn then scales with our clients and their growth ambitions, importantly. And again, from an internal perspective, we have got a very, very small payment operations team, and we specifically do not people to sort of manually make amend payments. We move those people into much more value-added services. In terms of benefits for clients and for the wider community, I think one of the key things actually in a prepayment perspective is that in order to achieve STP, you have to have this upfront transparency about what is required in order to actually land that payment. And that is as integral to the actual STP processing as it is to giving the client that flexibility, that transparency, that ability to control the user experience by knowing upfront exactly what data is actually required in order to land a payment. And then, of course, you get the faster processing times, right? So payments spend less time sort of held up in transit, held up in banks, upstream or downstream. And lastly, it is, I think, about the user experience and the trust that our clients can then build with the end customers, knowing that those payments have been built on stable, secure, scalable systems really helps build their brand, build that trust, and importantly, allow that end payer, whether it's a small business, a corporate, or a retail user, really to say, right, I trust in this digital payment processing set of systems and to move their volumes towards those systems.
Thanks, Piers. So picking up from that topic, Mark, I'll turn to you again, because you've been in the industry for a long time, and you know that a failed payment, especially if it's a false positive, is very expensive. So why do payments fail? Because nobody sets it up deliberately to fail. When I try and enter the data, I try and make sure it's as accurate as possible. So what goes wrong? Why do payments fail?
Okay, so I think, yeah, I mean, over the years, I've walked around many payment companies, banks, foreign exchange companies where they've got a big room full of people who are fixing payments. And critically, payments fail for two reasons. It's either data error, so that the data that you're putting in, the bank codes, the structures of the accounts, any other information, purpose of payment codes, places like India, different other rules, CNAPS codes, for instance, into China, and getting those out of date because you haven't kept your data up to date on what's going on in the banking world. So that's the first issue. The second issue is human error, and we're all prone to keying in information incorrectly, particularly if we're busy or stressed out. And if you add those two together, it's a combination that can lead to a failed payment. The other thing is as well, we almost assume that everybody somehow will know what is needed to make a payment to an account in another country. But I use IBANs as an example of a standard, but if you look at the IBAN structures in every country, they're all different. So the standard, in fact, is not as standard as we'd like it to be. So what we do is we provide the means to validate all the information you need for a recipient or a beneficiary in any country to make sure that payment in Currencycloud system or anybody's system will straight through process, arrive at that recipient's account on time and not bounce back and fail, damaging relationships and adding costs to the operational process within the sending institution.
Got it. So I'll take a quick audience question here. Sanjay comments that we hear about payment disruptors, and then you have the global payment brands like Visa, MasterCard, American Express, Union Pay, but nobody has been able to derail them. So is that something that you see as happening over time? Is that something that the payment brands are actually embracing the change and staying relevant in the form of a global network, and still the economics of these transactions are changing? So how do you see this change from your perspective on what role and position the international global payment brands have, both for the consumer payments, but also for the much bigger value, the much bigger volume of business to business, the commercial payments?
Yeah, so I'll start on that one, Piers, if you don't mind. So the big, if you think of MasterCard and Visa for payments, bank-to-bank payments as well as card payments, then they've been astute enough to realize that the world is changing and that people are more interested now in making a payment from their account into somebody else's account, even using a card rather than using a traditional credit card type payment. So MasterCard and Visa have been busily acquiring companies so that they can sort of metamorphosize from being credit card rails into being payment rails. So that's the challenge was set to them by the fintech community, by some of the big banks who have their own global networks that don't need to use the likes of Swift and MasterCard and Visa. And they've risen to the challenge. But there are other players coming along. I think we will see that if you look at companies like AntPay, is a good example. Started out by just holding people's money as a sort of a secure and trustworthy method of making a payment because of the lack of trust of using card networks. They've grown into a global company now. They're spreading their wings out of China into other parts of the world. So there are challenges coming from all over the place. But I think the big payment providers as such at the moment are here to stay because they've taken up the challenge.
I'd also just add to that there's no point in disruption for the sake of disruption, right? Disruption or derailing, as I think you mentioned, Shubhendu, should come at the benefit of the end customer, whoever that might be, whether it's a retail customer, whether it's an SME, whether it's a corporate. And when we think about disruptors, potentially that label has been assigned with fintechs and potentially Currencycloud is one of those. But when we think about that term disruption, it's not really necessarily about disrupting the entire network or rails. It's about disrupting the experience that end customer gets. And as long as that experience continues to improve for the end customer, whether that's on speed, bringing down or increasing the speed of global payments, whether it's on cost, whether it's on the surety, the certainty of payment, it really comes back to, at least in my perspective, it comes back to the customer needs. What are those customer jobs that have to be done? And then looking at how you disrupt in order to really solve for those customer problems, rather than just disrupting for the sake of disrupting.
Thanks, Piers. And like both of you put, simply faster. And the payment brands are also embracing the new rails. So it's not just the card rails, it's also the ACH rails. And it's also going to be the distributed ledger rails for the wholesale cross-border to start with. So I do see that digitalizing payments makes it start looking more like the IP networks that we are all used to from the consumer internet. And maybe you need a lot more guardrails because this is the internet of value. You're talking about real monetary assets flowing through the identity. But it's not just the consumers or the large banks. In the middle, you've got companies, both the large multinationals, but also their suppliers, which could be small household providers. And on one end, you might have very complex, very sophisticated procure-to-pay systems. But on the other hand, you may have just a simple Excel sheet. So that brings a very diverse ecosystem together when we're talking about business payments, when we're talking about cross-border payments. So Mark, Piers, from your experience, is the state of the business-to-business payments where a medium-sized company is trying to pay its staff, maybe in 2 or 3 countries, or maybe it's trying to pay its suppliers also in 7 or 8 countries. So what's the status there? Do they face big problems today? How are you trying to solve those for the corporates Mark Piers?
Okay, so I think with the likes of Currencycloud and other players in the fintech marketplace, they've risen to the challenge of the needs of the corporate treasury, whether it be a small company or a big company, to provide a service in the simplest way possible. And I think, you know, the much used words API, the letters API, come to mind, but a lot of the solutions now that are being provided are very light touch, API provided into systems. And in many cases, corporates don't see the fact that they could be using our solutions or Currencycloud solutions. They're seeing a corporate banking payment solution that will incorporate everything, their general ledgers, their trading platforms, their supplier ERP systems, and so on and so forth. So the key to the near real time or a payment solution is that it's transparent, it's detailed, it shows them what's happening to their payments, but they don't know that they're using, they don't need to know that they're using Currencycloud, or that they're using an Accuity product, or they're using a treasury, you know, they're using you know, one of the big treasury system providers, or even using a bank solution. So that's the key to getting mass usage of the newer solutions, the API-able solutions.
Yeah, I think that invisibility is key again, right? That in some senses, the action of creating the beneficiary and the payment and executing the payment is just a means to an end. The actual thing that has happened in the wider economy is that someone has provided a service or a company has sold some goods. The payment is literally just a means to an end there. I think actually, if we look back through sort of history, maybe more recent history, this kind of global economy is a newer phenomenon, and especially as the kind of the global digital economy has grown, and I would argue has expanded even more quickly actually during the past sort of 9-10 months or so because of the global pandemic. There then has become this growing need for digital payments as a result of some kind of activity within that growing global digital economy. And again, I think because of COVID, because of the global pandemic, that will continue to expand, continue to grow at a pretty rapid rate as more and more businesses and activities are forced to become digital, to be forced to go online. And as a result, we'll be looking for tech-based, tech-first, API-driven solutions in order to complete the last piece of the puzzle effectively within whatever that activity is within the global economy.
Thanks, Piers. So let's talk about 2020. It's not a normal year. What one would call a black swan. And it has superimposed a few phenomena that were anyways happening. So the rise of the digital platforms, the way that more payments were happening on a subscription basis, so that you could, in a way, mandate it to become a recurring payment. And then we had 2020, which meant a lot of refunds, a lot of reversals, a lot of chargebacks. And sometimes when you're looking from a card perspective, some of these eventualities are baked into the processes. But if you look at the fast ACH, especially with cases like India, where UPI volumes are going through the roof, they are crossing 2 billion on a monthly basis. Some of these minor but important process workflows around refund, chargebacks, reversals of payments probably are still being worked out. So how do you prevent all of these payment flows from becoming a manual drag on the merchants and the banks? So what innovations are you seeing in terms of automated refunds, automated processing of these exception cases, Mark and Piers?
Yeah, I mean, again, it goes back to the systems that are being used. The key is listening to what the customers want and providing those kind of additional functions within the solution. It's interesting, actually, somebody's just put a question up about crypto. Would that you know, blockchain and crypto, is that going to lead change? And I think in a sense, crypto and blockchain has scared a lot of the incumbent players into producing better solutions. A Swift GPI, for instance, probably wouldn't have been so prominent if it wasn't for the likes of Ripple coming along and saying, well, we can disrupt your marketplace. And when you're working in real time, which is crypto is real time, and you're looking at places like India and UK and Australia and Singapore, all these places are bringing in real time. GPI is Swift GPI is a near real time solution. Then you've got to make sure that all your remedial functionality that will aid and make sure that payment gets to where it's going to get works sub-second. You don't have the time. You don't have 2 days to fix it. It's got to work in real time. Even your AML of the recipient has to work in real time. And we're looking at sub 300 millisecond to completely check a payment for every avenue that we need to check it for, whether it's valid, whether it's the person you're sending it to or the company is an okay, is not a bad actor, all these things. And these are the issues that Piers and companies like Piers have to deal with, hundreds of thousands of times a day. But they do it because they can do it because it's automated.
I would say that actually that return process, that failed payment handling, the refunds in perhaps a card world has, or at least in the bank-to-bank account transfer space, has sometimes been an afterthought for companies, and it's taken a global pandemic to really kind of realign those perspectives and say, where are the customer needs here? I think in terms of refunds from a card perspective in the UK, there was a report this morning that there's still £1 billion worth of refunds sitting, waiting to be returned back to customers. But in the account-to-account space, again, one of the primary goals is to reduce the number of returns, to reduce the number of failures. And so you focus on the prepayment functionality, the prepayment processing, using the likes of the Accuity services to make sure that validation is done correctly, done to the best of all of our abilities, to try and reduce the failure rates, to reduce that friction downstream of the payment being executed. And there potentially is a little bit more data or maybe some friction, arguably, that a customer would get upfront by typing in an account number or an IBAN and that being shown as incorrect. But that friction is massively eclipsed by the friction that you get downstream when a payment has then subsequently failed. The days, sometimes weeks, that payment is literally, those funds are held up with a bank downstream. Again, sort of inhibiting the growth of the global economy. That those funds are tied up sort of in no man's land. And really, I think that focus has to be on the prepayment set of flows to make sure that the payment can be executed and that it will land, rather than trying to necessarily sort out the failed payment processes as well. Albeit that's I think an important part for many platforms to really tie into their system as well, make sure that is as automated and as scalable as it can be, precisely for the times when a global pandemic just suddenly hits the global economy.
It's interesting, actually, because there's a question coming up about the most efficient and cost-effective cross-border payments. Have we got any case studies around that? And I think it's interesting that if you look at the marketplace, say, I don't know, 10 years ago, making payments was predominantly banks and through Swift, and it was quite expensive, several percentages cost to make a payment, and it took time. If you fast forward to today, and with the likes of Piers' company and people they provide to, like TransferWise, Revolut, and all these other players out there, even in the UK, our challenger banks are providing near zero cost payments around the world to its SME clients. And I think the way that they approach this is say, look, we're going to provide this service at a very low cost, much lower cost than the banks, and we're going to find a way of doing it rather than finding a way of doing it and then lowering the costs. I think that's probably a way I would describe how the marketplace has evolved. So, a huge amount of investment has gone into the fintech world to be able to provide these leaner and more efficient and more functionally rich and transparent solutions. So that's the place to look for if you want to find a very low cost and very fast payment solution as an SME.
Thanks, Mark. So before we move to understanding the real trends for next year, a direct question from Kadir that came in is, what's actually the cost of a failed payment? So let's say I'm a small company, I had to send $1,000 to my supplier and it fails. I'm asked to verify, it takes a few days. How much friction have we introduced? How much have we lost as the cost of validating re-entry of the data and sending that again?
Okay, well, we've got a real-time reporting machine that tells us what's going on out there in terms of, so I can give you a view based on validating millions of payments a day. And typically we get the initial input of a payment instruction by a customer out of the payments that we eventually process. 8% initially have errors in, right? So if you're thinking, well, let's say you take 1 million as an example. So that's 8% of 1 million. There's a lot of payments to fix across our client base. But of course, by using tools like ours, then that payment gets fixed. We suggest fixes and it's validated and then all goes well. But the cost typically across the board, again, based on feedback from our clients, is about £50 in the UK, probably a little bit less in other countries. But to fix a payment, that's £50. So if you have to fix 1,000 payments a day, that's £50,000 worth of cost. So it's a very expensive fixing payments manually, because that's what it does. That's what you need to do. You basically have an erroneous payment. People get on the phone or on the email and they talk to the banks and they talk to the customer and they fix the payment. So that human cost is what drives up the cost of a failed payment, which is why you want to get 100% STP, so you don't have that issue. I mean, I will say typically that making IBAN payments into Europe has a lower failure rate. It's countries like India and China and other countries that ask for more information, Russia as well, where they're looking for things like purpose of payment codes, as well as just account details and bank bit codes. So that's where the big issues come.
And there's another layer of cost, I think, actually, which is almost hidden, but it is the cost of not being able to do some subsequent bit of business because those funds are not on your account. And those are harder to quantify. But especially in a post-pandemic or in a pandemic world, cash flow is king. It always has been for SMEs, but cash flow is absolutely king at this point in time. And that money being held up in a useless no man's land because of some bit of extra data that is waiting to be received by the beneficiary bank means that there is another cost of not being able to do some kind of other activity once those funds are in your account, whether that's paying some salaries or paying for other goods and services downstream.
Thanks, Piers. So let's take a look at the top 3 trends for 21. And we've mentioned, Mark, Piers, both of you mentioned APIs a few times. So what's happening on APIs? Because we see both API aggregators, and while commerce is looking like getting into a global mode, the payments look to be more becoming a national business, and you need to have these endpoints that need to handle all the 50 different payment instruments, all the 20 different bank account endpoints, and a few more exotic flavors in that market. So what is happening on API fronts? Because Mark, you provide both the KYC, KYM solutions. You also provide on a per transaction basis, the validation services as APIs. And Piers, you obviously are looking at providing the rate as a service, the risk and compliance as a service, and that will be based on your set of APIs. So how are you looking at using APIs to further your business, making it more simple for your customers?
Yeah, so interesting. There's a question about friction, and I think the whole idea of APIs is to remove friction. But of course, if the end result of that API is still using outdated rails or outdated solutions, then you're still going to have friction. So that was Sanjay Thacker asked that question. But for us, the API marketplace is about extending out of purely plugging into very clever solutions and then linking those to the banks themselves. So in the UK, we have an open banking initiative. It's been going on for a while. I think pretty much every country in the world is looking at that now. But we will plug into bank APIs and we'll be able to validate the existence of that account, that it's live or dormant, that it belongs to that entity or that person. If we so wish, we could also see if there was enough money in the account to be able to make a payment. And I think these are the big initiatives that are coming through for us. I think speed as well, faster payments, but definitely the API to API real time is the most, for us, will be one of the most important initiatives over the next coming years. It's not going to happen overnight because every bank has a slightly different version of what it thinks an open API should be, but it's definitely happening. Piers.
For me, in the digital economy, you have to really just think about APIs as a bit of pipe between an organization and its customer for some kind of exchange of value and usually some data. There's an organization on one side supplying a product or service that on the other side a customer needs or want in exchange for some monetary value. And so the trends are not necessarily about APIs per se, because APIs have existed actually in terms of sort of programming, the programming world for some time, decades. And there have been providers, Currencycloud has probably been one of them, who have been at the forefront of providing services via API. Accuity is another one. And so I think if you say that APIs, we accept that APIs are that piping between two entities, you then have to say, well, what can that piping do? What can APIs effectively enable going forward? And for me, there's kind of three things, and Mark's touched on a couple of them. But the first is this idea of embedded finance. The second is about the speed. So I call it RTP over RTP. So things like request to pay over real-time payments. And then the third is about that partnership collaboration. So in terms of embedded finance is really about abstracting sort of banking financial services via APIs that other players, other brands can then embed within their systems, so that the actual financial activity is again sort of an invisible consequence of the underlying commercial agreement, whatever that might be, that has happened between that brand and their customer. And I think it's this idea about the invisibility of these things happening. So, you might have, you might drive into a petrol station and fill up your car with fuel, and the car automatically pays for the fuel that you just put into your car. Or actually, we should probably be talking about electric cars. But anyway, in logistics, you might talk about some kind of goods that are being delivered, checked in via an automated system, and that automated system then calls an API to instruct the payment to then pay for those delivered goods. So we have to start thinking about this invisible embedded financial technology that is only made available by APIs. And that's that concept of embedded finance. And really it gives that customer centricity, the speed to market. Players can launch effectively those financial propositions within a fraction of time that they would have been able to do previously. And also that flexibility. If we think about APIs as sort of Lego bricks, it allows any brand, any business effectively to put together the different Lego bricks that they want in order to provide the solution that their customers need or want. I think Mark touched on the speed aspect of this. With APIs, with that automation, with the straight-through processing that we talked about earlier, you enable that speed of cross-border payment, as well as domestically. And I think going forward into next year, there's been, in some markets, there's been this talk of request to pay, but this idea that a request to pay solution that sits on top of an instant payment solution now is something that potentially starts to sit in parallel to some of the card schemes. You know, there's been talk about sort of point of sale of transactions being enabled by request to pay over instant payments. I'm not sure that's necessarily going to remove the need for cards. I think there's still an absolutely valid need for card payments, but there will be some use cases that start to emerge from that, from those processes that, again, APIs enable, that we'll start to see more of next year. And then the third, again, Mark's touched on it, but it's the partnership, the collaboration. There is this proliferation of APIs that now are starting to exist across various different industries, and including in financial services. And there's kind of two aspects to this, right? So the first is that you'll start to see, or we have started to see, and I think we'll see more of this next year, are some of the larger institutions, maybe some of the incumbent banks partnering with specialists to achieve those value-added services for their customers, again, in a fraction of the time than them doing and building this all themselves. But on the other hand, there is also this kind of this meshed ecosystem that is being built up globally. So, you know, we have an open partnership with Accuity. We deliberately pass that validation onto Accuity, who are the specialists in this, because we don't think that we as a business should be doing that, but we want that invisible function to be made available to our clients and their customers within our services. But I think there'll be more of these kind of meshed partnerships, collaborative models going forward that allow various different types of entities really to leverage APIs to get those specialist features and functions within their systems, and perhaps also allow some of the more, dare I say it, traditional incumbent players to stay relevant, to retain some of that market share that is potentially being lost to newer players. But equally, it will allow fintechs, new startups, to get to market in record time, because it will be literally bolting on those different APIs or using APIs to bolt on those different products that allows a startup to come up with an idea and deliver it to market and to their customers in as quickly as they can.
Thanks, Piers. It's very interesting. You talked about the invisibility of the payments and the customer experience having that embedded financial services. But on the other hand, when you look at the business to business payments, oftentimes you are coming up with situations where you have a PO and you can't match the receipts against the invoices, or you have partial payments, and then you have no idea as a small company where your money is. So as we talk about the invisibility of the payment transaction itself, I think there's this big trend about how the information about the payment and where that money sits is going to come to the foreground, so that I can always pull it out, and then the treasury is more comfortable, the finance knows when it's going to be cleared. So where are you seeing big innovations on that, I would say, visibility of the payments information, and how is it getting coupled with the actual documents and trade flows?
Okay, so well, it depends on, I mean, you know, cross-border payments. Well, if you look at things like trade finance, for instance, that is suddenly seeing a lot of innovation, because it was very much a paper trail in the past. It's now becoming more digitized. Just cross-border payments at either real time or near real time. The innovations are coming because being able to provide transparency to know where your money is, which accounts it's sitting in, how it's affecting your day-to-day accounting, are not just coming from the likes of the newer fintechs, but the existing providers of accounting systems, for instance, like QuickBooks and Xero and all these other players. They're integrating their APIs into different systems. We're seeing payment rails being integrated with accounting systems, with trade finance systems. All these different things are the ability to look. 20 odd years ago, I founded a company to build middleware solutions to plug systems together in banks, because banks had hundreds of systems and none of them were talking to each other. And that made it incredibly difficult for their customers to know where their money was at any time and how it's affecting their cash flows and their accounts. Now we talk about APIs, and people complain because it took them maybe 10 or 15 minutes to implement a REST API. Yeah, I lived through the days when you take 9 months to build a system-to-system integration and cost hundreds of thousands of dollars of consultancy time. So the world has changed, and I think, but ultimately what we're trying to do is, it's all very well talking about technology for technology's sake, as Piers said earlier on. What we're trying to do is meet the needs of small to medium businesses, large businesses, consumers, and they want to be able to make a payment to anywhere in the world, anytime, on any device, and make it real simple. And then they want to know what's happened to that payment and how it's affecting their cash position or their accounting, and that's the drive. And APIs of really clever solutions from best of breed providers are going to lead us to that sort of nirvana.
We give just a couple of use cases actually on that as well. So two clients of ours, one is Starling Bank in the UK and one is Wallex in Singapore, both doing sort of similar things with our Currencycloud Spark product, which is this ability to issue virtual accounts in various different jurisdictions, and in a B2B invoice payment. Even that small thing like a virtual account number in country becomes absolutely crucial. So previously the flow would have been, an SME in the UK or an SME in Singapore has done some business with a company in the US, for example, and sends an invoice to that business in the US. That business in the US has got is forced via their incumbent high street bank to send an international payment from one of the major banks, probably in USD, to settle an invoice that lands in the UK or in Singapore. That payment is really expensive for that company to do in the US, and more often than not, that payment lands short in the UK and in Singapore because of intermediary fees. By having this ability to issue local virtual accounts within the US, it enables that SME in the UK or that SME in Singapore to literally list a local US account number and ABA on the invoice that they can then send to that company in the US. The US makes that invoice payment on domestic rails, perhaps on the ACH rails. It lands in full into the account in country. And because every single company is then issued a specific virtual IBAN, it means that payment can instantly be reconciled back to that UK or that Singapore SME's account. And it's that kind of flow, it's that kind of use of data and kind of virtual structures that is really starting, I think, to transform this idea of reconciliation in a B2B payment space. I think there's still more to be done. There is, with some of the data standards that are emerging around the world, ISO 20022 is one of them. There is more to be done with data, using that data to be able, for systems to be able to do more automated sort of functions off the back of something being received. Again,
looks like we lost Piers. Well, as a gap, whilst Piers comes back on the system, there's a question from Vatsal Shah. Do you see Fortune 500 companies moving to challenger banks? I think the reality of that is, sorry, Piers, we lost you there. I'm just answering a question. I think to become a bank is onerous. So I'm not sure that it's attractive for any large company to become a bank when they're trying to wrestle with running the business that they understand. Having said that, you do have the big tech players who are starting to act a little bit like banks for payment purposes, like Apple and Google and so on. I think it's going to come from other areas. So if you look in the States, you've got companies like Shopify, and Shopify have thought, well, I can make payments. Why don't I become a payment company? So the way they pitch themselves from an investment point of view is no longer that they are an e-commerce player, but they're a payments player. So you can see changes coming, innovation from probably areas where you didn't think it was going to come. But I'm not sure that the Fortune 500 companies want to become banks. But I'll probably be proven wrong, like most things.
So, Piers, Mark, we talked about the orchestration of payments for the merchants, for the banking community as well. So if you are doing this as a kind of a DIY, setting up these dynamic routing configurations, handling the local payment ecosystem, trying to make the payments page look as local as possible in the domestic currency. So who is the conductor? So are the merchants really taking up these services, or do they feel that this is too much of a responsibility and they just want to have more sales done? So what's the reaction been from your clients around these orchestration services that you're offering?
Well, I think they actually like them. They want to find either the quickest or cheapest route. We can do that automatically. They don't need to worry about that. They just say yes. They pick cheapest route or fastest route or whatever, or preferred correspondent, perhaps if it requires, if it's a non-native currency that they're making a payment. So the issue, that's not an issue anymore. That's gone away from our perspective. They use our solution. And I know that Piers will probably have a good answer on that one as well. Piers?
Yes, I think, I hope I'm back now. Apologies that I dropped
You
off.
are back.
How embarrassing. So I think from an orchestration perspective, there's probably three components. The transaction routing, dynamic routing, as Mark mentioned, and it is being able to access that orchestration layer via an API. And then whatever orchestration provider that you are then interacting with via API also has to have some kind of analytics, reporting, insights type functionality as well, to give you that holistic package of then telling you what has happened, again, after something has been instructed or via API. I think for me, payment orchestration is probably a term that has emerged most commonly from the card space, but has started to be applied to other parts of financial services, payments landscape. And really, it's just about having, again, sort of software systems that can automate, coordinate all of those different operations that need to happen within the end-to-end payment lifecycle. And so really, in terms of customers, it comes down to what the customer is looking for. Is it are we talking purely account to account? Is it purely card payment space? And it has to come down again to those use cases. What is that end customer trying to do? What are you as a business trying to achieve? To then say, well, who might be the right orchestration provider or layer to then work with? Again, we're talking about different partnerships, collaborations that are happening that makes this perhaps a slightly gray area, where we have various different providers working with others to provide that sort of invisible set of transactions. But it really does come back down to, I think, those in terms of successful orchestration layers have to have these concepts of the transaction routing, obviously delivered via API, and those insights, reporting, analytics packages then sitting on top. And really, in a cross-border perspective, this is a really, really complex landscape, right? We're talking multi-jurisdictional compliance and regulation. We're talking about eKYC and onboarding of clients in various different regions around the world. All of the AML and transaction screening and monitoring that comes with that. The difference of payment rails, different payment types, the different data that's required to be sent to land payments on those different payment rails in all of the different countries that we send to around the world. Changes in formats, data formats, the move to ISO 20022, changes in payment purpose codes, as Mark mentioned earlier, or changes in IBAN structure. It happens more than actually we think. And all of that needing to be instant, needing to be happening in real time via API, probably being cloud native, and wrapped up into a trusted solution. so there's a lot of responsibility. I think there's a lot of overhead in becoming or offering that sort of orchestration layer. But it is also about even orchestrators offering or collaborating with other partners in order to make those layers as effective, as streamlined, as efficient as they can be.
Thanks, Piers.
Yeah.
So before we draw to a close, let's take one last comment from Sanjay, who is a little bit skeptical about straight-through processing when it comes to cross-border. And he attributes most of this to issues in mapping out unstructured data to structured data. So from your experience of ISO 20022 and the kind of rich data fields that are going to get used more by more such implementations, do you have reason to be more optimistic than him?
Interesting. I mean, yeah, I mean, the quality of data that is provided for a payment sometimes is pretty poor. From a corporate perspective, their systems unfortunately don't kick out lovely messages in ISO 2022 formats. There are companies out there working very hard on transforming unstructured data into a format, any payment format, whether it be a Swift MT message format or an ISO format. So I wouldn't lose heart, Sanjay. The people are working at it, but it is the issue is more the systems that are providing the data. They need to be perhaps updated a little bit so that it's then easier to transform them, their information into a format that can then go into a payment message and beautifully transform into a straight-through payment message in real time.
And this comes back to this conversation about disrupting for the sake of disruption that we were having earlier. And actually, this is an example where there are players across the industry, and it's not just fintechs. You know, we see some major banks picking up on this as well, some of the more progressive banks. But disrupting for the sake of a better customer experience or a more efficient customer experience, because it's cheaper, faster, both for the end customer, but also actually for the bank if they are or for the fintech or for the FI, the financial institution in between, if they're having to do less of this manual repair and less of this manual intervention. And so this is a perfect example in my mind where this is about disruption for the sake of that better experience. It is coming. Unfortunately, some of those moves have been slightly delayed. If we look at the Swift cross-border payments systems, which have run on MT103 messaging for the last years and decades, with 11,000 financial institutions around the world connected to that network, it's going to take some time for that migration to happen. But again, Swift, I think, have identified that there is a challenge here, perhaps, you know, spurred on by the likes of Ripple, perhaps others, in terms of that kind of innovation of how that data can travel. And so they are also looking to help, you know, providers within or incumbent banks potentially within that cross-border space. But it is coming. That global standard, the ISO 20022, allows for a lot more of this data to be sent in a structured mechanism. And I am optimistic. I have hope actually that the enforced changes over the coming years, coupled with disruptors, whether they are fintechs or incumbents or progressive banks, pushing the boundaries in terms of that customer experience, gives me hope and optimism that we will get to something that is a little bit more efficient and streamlined sooner rather than later.
Thank you, Piers. So on behalf of Accuity, Currencycloud, and Medici, I'd like to thank all the participants who joined us this afternoon, especially those who asked insightful questions and made their comments from their experiences. And Mark and Piers, we wish you a great 21 and looking forward to bigger things from you, especially in Asia.
Well, thanks. Thanks, everybody.
Thanks for having me.
Thanks, everybody, for joining.
Bye.
Bye-bye.
Cheers. Bye-bye.